Okay, let's talk about a couple of case examples here. We have already talked about the use of the John Hancock product with one of the other advisors within Provada. I'd like to just address the issue, item B, which shows up as annuities with a long-term care rider. Again, John Hancock, and I'm not sure if there are other companies that provide it, but for a roughly 40 basis point charge, you can get a long-term care rider automatically issued with an annuity contract with no underwriting. Now, the annuity product requires that the rider be enforced for a 6 or 7 year period, depending on the product chosen, before benefits are available. Can you imagine the thousands, if not millions, of people out there with serious illnesses like MS, Alzheimer's, Parkinson's, and other kinds of illness that they can't get a long-term care policy, and you can sit in front of a client and say, I've got a solution for you? This is one of them. I already addressed the issue in item C about group products. These kinds of products really open the door to large companies and charitable groups. I do know of a company right here in California with approximately 5,000 employees that just added a group long-term care policy. I did not do it, unfortunately, but I do know that it happened. And companies large and small are looking at this much more frequently now than they used to.
Let me ask you about that annuity very quickly, and I don't want to get into it in detail. Is this a benefit of more money, or is it a different way of drawing down the value of the annuity?
It's additional money, Bob, and it's a great question. I should have addressed that. Not only does the annuity contract grow in value over time, either on a fixed or variable basis, and that money is always available to the client, but the long-term care benefit is an additional benefit attached to the policy, which can be over $3,000 a month and does adjust for inflation. And the client can draw down certain amounts from that policy every year from years 1 through 6 if they need to do so, say in the range of 10% a year.
Excellent. I need to look into that more deeply.
Item D is we really stand in front of our clients when it comes to claims time. I've done this for over 20 years now, and it really hurts my heart when I see a client fighting to get what they're entitled to when it comes to benefits because of contract language. And I point out here in this slide that I have sued 3 carriers. I should make that a little clearer for you. We threatened to sue 2 of 3 companies, and we went to the Department of Insurance, and we really put pressure on them to make claims paid their position as opposed to trying to avoid a claim. The 3rd company, we did have to get an attorney, and I did have to be deposed by that attorney for the benefit of the client, which I was happy to do. And the bottom line is the smallest claim that we got settled was $140,000 plus legal fees, and some of them were far larger. If you're not there when the client has a claim, then you really miss an opportunity, because when we did that case and we brought in an attorney and we actually put ourselves on the spot, once it was satisfactorily resolved, we got huge benefits from the next generation, because the children, who were young adults and also in their 40s and 50s, came to us and bought products from us because they knew we'd stand behind them. Lastly, I'd like to point out the companies that we use. They are companies like John Hancock, Genworth, Prudential, State Life, Unum, Allianz, Golden Rule, Guardian, Penn Treaty, Physicians Mutual, Nationwide, MoneyGuard's product, MetLife, MedAmerica. There are others, but these are the ones we definitely do discuss. I think in closing, what I'd like to do is to just say to you that I really appreciate you taking the time to join us today, and I'm going to turn this back over to Bob and see if we have any questions at this time.
Bill, that was absolutely fantastic, and we do encourage questions. For those of you who have been with us for the whole time, we really appreciate the time you've devoted to this. And we do encourage you to follow up with questions, but let's save Bill having to deal with all of these questions from our brokers. So please make sure to get in touch with Nicole. You can email her at nicole@provada.com, or you can email me at bob@provada.com, or you can communicate with us in the normal way, but through the website or in any way you choose. Thank you very much for attending, Bill. Thank you for an absolutely fantastic job. It's always a pleasure to work with you, and it's been a pleasure to participate with you in this great webinar.
My pleasure, Bob. Thank you. Can I shut this off?
Wait, hold on, wait, I'll do it.
This was great. This was fantastic.
Perfect.
How come